Good day, subscribers, and welcome to Rozara's Investments. My name is Ara, and today is Monday, June 25th, and we are having a very, very rough day in the stock market. Anyone that knows me knows that I invest in a lot of Chinese companies, and a lot of those companies are down anywhere from 5% to 10% today. So I'd like to make a quick video and tell you about the 4 companies that I bought today. But before I do, I want to preface this with some of the mistakes that I've made, because I've made a lot of mistakes and I don't want to seem like a know-it-all. So one of my biggest mistakes in life, in my investing life, was not investing in Domino's Pizza. I had the chance to invest when shares were $14 each. Now Domino's is something like $270 each. So if you would have told me 5-6 years ago that Domino's would be $270, I would say you were crazy. I would say that's just absolutely ridiculous. And you know, a great return going from $14 a share would be going up to $28 or $30 or $45 a share, give or take. I decided to pass on that investment because I was scared. Another investment I passed on was Apple. I bought shares at $100 each. This was before the stock split. So split adjusted, that would be about $14 each. So I bought shares at $100 each, and because I was scared to lose some of my gains, I sold my shares at $159 each. Again, that's split adjusted prices. So what would the equivalent of those 100 shares be now? I'm sorry, not 100 shares. I bought shares for $100 each, and I sold them for $159 each. So those shares right now, if we multiply times 7, those would be $1,400 each. For every 1 share I had before, I would have 7 shares now for almost $200 each. So that's almost $1,400 per share. So that was a huge, huge mistake that I made by not holding on to those shares. So getting right to it, the 4 companies that I bought today were Baidu. I bought 4 shares of Baidu, around $247. I bought this because this is an amazing company. It is the equivalent of Google in China. And if you see my videos, I've talked about Baidu quite a number of times. They spun off a company called IQ, which is up like 100% to date, give or take, and I own shares of that. But anyway, Baidu, yeah, $248 a share. It's give or take 30 times earnings. I don't know exactly what it is because I don't pay attention to the details on a day-to-day basis, like a dollar-to-dollar basis. But it is down from a recent high of about $270, so I think this is a great deal and a great time to get in. The next company that I bought is YY. YY is a company that I've also talked about before, and I've made a video about it. I bought shares today at $110 each. I bought 40 shares for about $4,400. Again, this is like Domino's Pizza. I'm trying to buy a great company when it is being kicked down. It has been beaten and everything, and it seems like nobody wants to buy shares at this company. So I am the one taking the hit, buying the shares. Give me the shares of YY.com. So this company has not only growth, but it has an amazing balance sheet. And they own over 40% of the new company Huya, which is similar to Twitch. So Huya has been doing amazing. They own 40% of it. That has got to be a good thing for YY. And people, the only reason why they're not buying this company is because of all the trade talks between US and China and the tariffs and things like that. So this is a great company, and I am biting the bullet. And even though I am afraid, I am buying $4,400 more of YY. Another company that I bought today is also a company I own, JP. So JP is another Chinese company, and they are in the wealth management business. This company is only about a $650 million market cap. So stock market wise, this is a very, very small company. But they have the potential to earn over $72 million this year, and that is GAAP net income. $72 million. So if we were to place a 10 times earnings multiple, that would make this a $720 million company. But why put a 10 times earnings multiple if this is a company that is growing like crazy? Check out the financials for JP. So I bought 100 shares of that company. Again, it's very down. I bought shares for about $18.08. So I'm scared, but I'm buying shares because this has potential to be up 100, 200, 300% in the next few years. Because 1, there's nothing wrong with the company, and 2, the shares are so cheap. Right now it's trading at about 9.5 times earnings. I don't see any reason why this company shouldn't be trading at 30 times earnings, and even more in the next couple of years. This company is growing very, very nicely and can easily be a $2 to $3 billion market cap company. So I would highly suggest checking out these companies. Off the top of my head, I can't even remember the fourth company that I bought, because seriously, there's been so many companies that I have considered buying today. I kind of feel like I've been in a little bit of a whirl, like a tornado. Like, just my mind is going crazy. Like, so many companies. Actually, I'll tell you about one company that's actually up today. HX. HX is a competitor to YRD. Oh, I'm sorry. YRD is the fourth one. HX is a competitor to YRD, and it's up to $10 a share. So I hope that some people have gotten into this one, because this is a company that is in the peer-to-peer lending business, and another Chinese company, same as YRD. And this company is, in my opinion, this company is worth well over $40 a share. They're growing very, very nicely, and the Chinese regulations about peer-to-peer lending, according to the CEO, do not affect this company at all. So HX is one company that's up. And the last company that I bought shares of today is YRD. YRD is a very big peer-to-peer lender. They had their IPO in 2015, and then in 2016 there were no IPOs. The stock market was just doing terrible. If you would have bought shares of YRD at that time, you could have bought shares for about $3.50 a piece. Now, recently, the stock has been up as high as $50 a share. But because of recent sell-offs over the last couple months, the stock is trading for $20 a share. So why did I buy shares? There's lots of stocks that I could buy for $20 each, because one, this company is growing like crazy, and two, this company is earning real money. They had a recent share buyback announcement of $20 million. And recently also, Goldman Sachs lent them over $300 million for business operations. So Goldman Sachs believes in them. They believe in themselves because they're buying back more shares. And because this company is doing fantastic and only trading at about 6.5 to 7 times earnings, which is ridiculous for a growing company, this company could be a steal and could easily be up 500. I was right. Whoa. The number sounded weird coming out of my mouth. 500% to 1,000%. I completely think this company right now is worth $125 a share. And I'm picking up shares at $20 each. This company has absolutely nothing wrong with it. There are fears associated with it, but right now this company has absolutely nothing wrong with it. When investors lend borrowers money, YRD takes a piece of the action. And those investors are protected through insurance, and YRD has a certain amount of write-offs, but the amount of people that are actually paying back the company far outweigh the amount of people that are not paying back their loans. So it's a scary time to invest, and today is a very, very down day, and there's a lot of bad news, but I'm buying shares of a lot of different companies today. So wish me the best. If you do the same, I wish you the best. Thanks for subscribing. Thanks for listening, and have a wonderful day, regardless of how much money you do or don't make.